Global share markets jumped sharply today after President Mubarak promised to step down at the end of the year. The Australian dollar kept rising as well. Here's Alan Kohler.
Well, the share market seems to have decided the crisis is over, even if the Egyptian protesters aren't all that satisfied with another 8 months of Mr Mubarak. There were pretty solid gains in the US, Europe and Asia today as buyers re-entered the market in some force. And that translated into 2% gains by the big miners, as well as a few industrials like AMP and Foster's. And the All Ordinaries ended up rising by a bit less than 1%. And with Cyclone Yasi bearing down on Queensland, insurance stocks took a battering today. Suncorp, IAG and QBE all fell around 2%. The Aussie dollar went up close to a cent compared to this time last night. Now, it seems to be winning whatever happens at the moment. Turmoil equals rising oil prices and thus a rising dollar. And no turmoil equals happy investors and a rising dollar. Now, here's a couple of graphic perspectives on what's happening. First, as I mentioned last night, the crisis is occurring in the midst of the second food price shock in 3 years. Now, I'm not saying that's the reason there are protests across the Middle East, but it's certainly not helping. And secondly, gold might be a good hedge against inflation and or deflation, but it's apparently a lousy hedge against political turmoil. This graph charts the gold price against the cost of insuring Egyptian debt against default, what's called the CDS spread. It's a sort of financial measure of the crisis in Egypt. As it's gone up this month, the gold price has gone down. Last night gold went up very slightly, as did silver and base metals, while oil went into reverse, and so did the global wheat price. And today's economic news in Australia was new home sales, showing a big drop in apartment sales in December. Total new home sales are down 11% in 6 months. And that's finance.